Good morning and welcome to IG's early morning call. This is Monday, the 4th of September. Well, what have we got coming up on today's show? Well, we start with equity markets, and the Seng is leading gains in the Asia Pacific region. It was closed on Friday, so it's reacting this morning to Friday's news and last week's updates after China's factory activity for August expanded and the central bank announced a cut in reserve requirements to boost the economy. Also coming up on today's show, central banks, well, there'll be monetary policy decisions from the Reserve Bank of Australia and the Bank of Canada, with both expected to keep rates unchanged. And also, oil rally, we're keeping across crude prices today, after both Brent and WTI recorded their best weekly gains in 5 months and set new 2023 record highs. Well, not record highs, just, 2023 highs for this year. So, welcome to Early Morning Call. US Labour Day is indeed ensuring a quieter start to the week, but there is economic data and corporate updates to keep across. But first, let's have a look at the volatility index. Well, the VIX is marginally higher this morning. It's up nearly 20%, as you can see there. However, volatility is lower than what we saw during August and is back at the mid to end of July level of around 1549, 1546, with 30 minutes to go now until the European markets open as well. This is how things are looking across Europe. Well, if we first take a look at the FTSE 100, set for 0.51% up at the moment. The DAX in Germany up 0.34%, and France's CAC 40 up 0.48%. So currently set for a higher open across Europe. Well, the FTSE 100 closed at 7464.54 on Friday, ending the shortened week up 1.8% after a 0.3% rise. Well, UK corporate news will dominate this week with earnings updates from Ashtead and Barrett Developments, although no earnings reports today. So overnight in Asia, well, Japan's Nikkei 225 was up marginally as well. Australia's ASX 200 rose. On Friday, Asian markets, though, largely traded higher as China's factory activity for August expanded and the central bank announced a cut in reserve requirements to boost the economy. Now, if we just pull up Hong Kong's Hang Seng chart here, there we go. Well, it was closed on Friday, but is reacting this morning to Friday's news. And you can see it is trading at a 3-week high, but it's not back to the high seen at the start of August. This week, though, as I said, China will report some economic data, including CPI, PPI data, and a trade balance update. So that will help gauge the country's economic trajectory. Australian markets were, well, as I said, facing a busy week with the RBA set to reveal its latest interest rate decision. And it's also releasing second quarter GDP figures, which will also be keeping across. Well, now let's have a look at how Wall Street closed on Friday. Well, the S&P 500 up 0.18%, Dow Jones Industrial Average up 0.33%, Nasdaq Composite down 0.02%. Well, the S&P ended after a jump in unemployment cemented expectations of a pause in interest rate hikes this month. The Labour Department's report showed the August unemployment rate rose to 3.8%, while wage growth slowed. Non-farm payrolls rose more than expected, adding 187,000 jobs in August, way above the 170,000 that the markets and that the general consensus was. That's what we were expecting. Now, if we just pull up and have a look at the US charts here, well, the Nasdaq declined 0.02% to 1403, 1.82 points. And for the week, though, the S&P rose 2.50%, the Dow added 1.43%, and the Nasdaq, as I said, climbed 3.25. Well, the US stock market will remain closed today for the Labor Day holiday. US indices, though, the S&P 500, Dow and Nasdaq, as mentioned, are still trading on the IG platform. So moving on, let's start in Germany because this morning it's released its latest trade balance, and the trade surplus narrowed more than expected in July to 15.9 billion from 18.7 billion in June, as imports rose by 1.4% while exports fell by 0.9%. Well, the balance of trade in Germany this time is expected to be 13 billion euro by the end of this quarter. That was according to Trading Economics global macro models and analyst expectations. But if I just pull up the euro US dollar chart here for you, well, the US Labor Day holiday will restrict any USD euro moves, big moves, but the currency pair has been keeping the reins at a low level. The euro pair, that said, remained pressured around the 107.75 during the early morning in Asia. And the euro bears initially retreated in the last week amid the downward revision to the Q2 US GDP growth and softer PMIs before the upbeat prints of inflation clues and employment statistics also weighing on the currency pair. Also, to consider a softer inflation figure from the bloc has also weighed on the euro US dollar. So moving on in other news, we'll be keeping across that, but a couple of central banks will draw attention this week, as noted. Tomorrow, the Reserve Bank of Australia is due to decide on its rates. Official cash rate is almost unanimously expected to remain at 4.1%. On Wednesday, the Bank of Canada, well, economists think Tiff Macklem will keep the BOC overnight rate at 5%. And if I just bring up the Aussie dollar, US dollar chart here, the latest Reuters poll on RBA rates show that almost all economists agree on unchanged rates, and inflation shows signs of easing. A majority of them expect a final rate hike next quarter. Well, the Australian dollar this morning is still trading near 2023 lows against the greenback. And if we just switched over to the USD Canadian dollar, no change also in Canada on Friday. Canadian economy missed expectations. The GDP growth rate was flat quarter on quarter. Economists expected a 0.3% rise. Well, the Canadian dollar is also trading near a 3-month low against the US dollar. Now, moving on in corporate news, Ryanair, we're watching out for it because shares at the open in Dublin. That is after the airline reported that it transported nearly 19 million passengers in August. That's an 11% increase on the same month last year. Load factor also rose to 96%. Well, just pulling up briefly the Ryanair chart, shares are trading near a 2-month high. Okay. And on Friday, the Wall Street Journal reported that SoftBank is targeting a valuation between $50 billion and $55 billion for the semiconductor and software designer. This is the ARM IPO referring to here. Price share between $47 and $51. According to Reuters, Apple, Nvidia, Alphabet, AMD, and other customers of ARM Holdings have agreed to invest in the chip designer's IPO in that price range. Well, SoftBank will now hope that once trading, ARM shares will attract other investors. SoftBank acquired the 25% stake in the company it did not already own at a valuation of $64 billion. Okay, well, oil prices are little changed this morning. Both Brent and WTI just sort of marginally lower, around 0.04% when we last looked. WTI and Brent, however, recorded their best weekly gains in 5 months last week and set new 2023 highs, benefiting from the weakness of the US dollar and also supported by economic support measures unveiled, as noted by Chinese authorities. OPEC plus supply cuts are also on the cards after Russian Deputy Prime Minister said last week some countries in the organisation have agreed to pursue with production cuts. Last Friday, the total Baker Hughes rig count declined by 1, taking the total rig count down to 631. The number of active oil rigs, meanwhile, remained at 512. So we will be keeping across crude. Lastly, let's take a quick look at gold. Let's take a look at spot gold, and it's 0.25% higher this morning, continuing last week's upward trend. You can see there. Well, One more look at the FTSE 100 and before the markets are set to open, trading up, set to open 0.51% up at the moment. So we will be keeping across that, and do stay with us for the rest of the day. That's it for now for your early morning call. Please do subscribe to the IG YouTube channel and keep across our updates on Instagram, Threads, LinkedIn, and all those social media platforms. We are on them. Have a great day. Thank you for watching.